The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Checking in on Bitcoin again, the CoinDesk Bitcoin Price Index, XBX, is at 41,680. That's down 3.16% on the day. The CoinDesk Ether Price Index, the ETX, is at 3,195 and, 96 and 22 cents, down 5.85. And the DeFi Index, the CoinDesk DFX, is at 431.75. That's down around 2% on the day. Okay, so we are now going to have a chat with Ben McMillan, the CEO of IDX Digital Assets. He joins us now to really discuss these rather ugly crypto markets. Good to see you. Hi, Ben.
Hi there.
Tell us what's going on. What is the reason for this sell-off we've seen this past week or so? And it's really an extension from sort of weakness in December as well. And please, when's it all going to end?
Yeah, no, it's the million-dollar question. I mean, I think I want to hit a point that you just mentioned, which is, this is really extension of weakness that we saw in Q4. And, even us internally, our models started raising cash back in November. And, we went fully to cash a few weeks ago. So it's not like this came out of the blue. I think what was a surprise to candidly all of Wall Street was kind of the hawkish pivot in the Fed minutes. And so that was the obvious catalyst to just, kind of precipitated a sell-off across all risk markets, which includes now Bitcoin. If you look at digital assets, cryptocurrencies, they traded down kind of in line with very high multiple tech stocks, consistent with a lot of the kind of future promise of cryptocurrencies being, priced further out. So any forward, any expectation of higher interest rates, increases that discount rate. So to your question about, what does it look like going forward? Our models are actually getting a little bit closer to putting risk back on the table. This sell-off, I think it's important to remember in the context of cryptocurrencies, this sell-off was kind of global in nature. If anything, I think this speaks to the fact that digital assets have now kind of arrived. They're trading more like traditional assets. One of the big themes we saw last year, which really started back in 2020, was kind of the mainstream adoption of institutional investors. These are the clients that we talk to. These are pensions. These are endowments. These are folks that, really weren't considering digital assets as part of a core portfolio a couple of years ago. And now all of a sudden in 2021, in part because of inflation concerns, they're figuring out ways to put it in a 60-40 portfolio or whatever that might look like. And what that means is now, interest rates and Fed policy matter a lot more to digital assets than they did a couple of years ago.
So, I mean, you mentioned the Fed.
Oh, sorry.
It's okay. All right. Just pick up a little bit on what Ben was saying on the Fed. We had the jobs report out this morning, Ben. It was look, on the year, this is I think the biggest gain for a very long time, record annual gain according to the Wall Street Journal. What does that tell us about the outlook for the Fed and therefore, that factor in the willingness of institutions and others to get back into crypto at this stage?
So that's a key question, is the jobs report. And I think what's important to remember is, how is the Fed going to view that? All eyes are on the Fed now. We got these this more hawkish expectations of, not just, rates rising a little bit sooner than expected, but also them potentially tapering the balance sheet more and sooner than expected. So I think investors are now looking at how everything is going to potentially alter Fed policy. That includes, jobs reports, that includes Omicron, and, how that might potentially just fade into the distance, or is there a new virus, on the horizon that could potentially catalyze, more monetary and fiscal stimulus? But it's really all about all eyes on Fed policy. Now, it looks like a lot of the negative expectations or surprise has been baked in. When we just look from a technical standpoint, it looks, when you start looking at order books and things like that for digital assets, there's a lot of buying power at kind of the 40,000 mark. 3,000 for ETH. So, I think there's a lot of dry powder with institutions on the sidelines kind of, looking ahead and let's not forget too, the structural bull case for digital assets is as strong as it's ever been. And, it's better than a lot of other asset classes that institutions are looking at. So the volatility has to be front and center, but the long-term outlook is still, very good.
Ben, I want to touch a little bit on the topic that you brought up earlier, this idea that crypto is becoming more mainstream and more institutional adoption of it. because we had a series of liquidations over the past few days. We've gone in Bitcoin in terms of perpetual futures. We've gone from about 19 billion to 16 billion. About 10 billion down to 9 billion. So it doesn't seem like much, right? In the traditional financial markets, that's generally not a lot, but in crypto, it's an incredible amount of liquidations for it, and yet there's still all this leverage, relatively speaking. Do you think that's a sign that it's a mature market finally coming to, and that we might see even more leverage going forward? Or is it a worry that, hey, you know what, there's still some room for this more liquidations to happen in the coming weeks?
Yeah, it's interesting. Leverage is always a concern, and particularly, when you look at the Asia session, if we go back to summer of last year when China banned, Bitcoin mining, again, that kind of catalyzed the sell-off. But then what you saw was overnight during the Asia sessions, the massive leverage, which is much more popular among Asian traders than it is among, U.S. or Western traders, just kind of precipitated this kind of liquidity cascade. And so, we saw a little bit after the Fed meetings. A lot of the U.S.-based institutions are not using leverage to buy Bitcoin. I think that's still much more kind of a retail, and specifically an Asian retail trading mentality. It is a concern. I mean, it's not nearly as bad as it was at certain points last year, where the leverage numbers were flashing red. But, it's something to look at. Again, in the context of when you've got an exogenous event like, kind of surprising Fed minutes, to the extent that there's leverage in a sell-off, it just, reinforces any down moves. But yeah, to answer your question, about institutions, I think, really it's just the, and I like to point to, Paul Tudor Jones's letter to investors in, I think, May of 2020, where he first started seriously talking about Bitcoin as a store of value in light of unprecedented global and monetary stimulus. I think that was really kind of what popped it up on the radar of institutional investors. And, we've continued to just see, increasing adoption, flows into, Bitcoin ETFs and mutual funds. We launched a mutual fund last quarter. We're continuing to see, institutions and, not just big pensions and endowments, but wealth advisors, people that are investing on behalf of others kind of start allocating to this asset class.
Good morning, Ben. So CoinDesk Research recently issued a report in which they found that in 2021, Bitcoin dominance declined. And, we've seen an explosion in the alt market, it's particularly with specific alts. So just two things. One, going forward, 2022, do you see that alts are going to sort of decouple from Bitcoin in terms of performance? Because at least over the short term, like the past couple days, the charts are just a sea of red, right? Bitcoin goes down, everything goes down. Do you think that will continue over 2022, or do you see more of a decoupling?
No, I definitely see more of a decoupling. And I can tell you, again, it's interesting, our perspective, because we speak only to other institutional investors. And, back in 2020, it was, 2019, 2020, it was really all about Bitcoin. Bitcoin was synonymous with crypto. All of a sudden in 2021, we started to see investors discerning more between, Bitcoin and Ethereum. They understood that there were different value drivers. Ethereum was kind of underpinning, the DeFi, boom. And so, there was a greater discrimination among investors in looking at, all right, it's not just do I want exposure to digital assets, do I want Bitcoin or Ethereum or both? Now we're seeing the same thing with DeFi. What's interesting is a lot of the institutional investors I talked to that were originally very skeptical of Bitcoin couldn't really understand the value prop. It doesn't do anything, quote unquote. There were still even people saying it's a Ponzi scheme. Ironically, many of them understood the value prop of DeFi a lot quicker when we started explaining, that something like a Uniswap is really just a decentralized version of a Coinbase, for example. And instead of owning shares and stock in Coinbase, you can own the governance token of Uniswap. And so, consistent with your point about the decoupling, I think that's emblematic in what we're seeing in conversations with clients. To your point, right now it's a sea of red. This is just all risk assets selling off, but I think we'll start to see, not only decreasing Bitcoin dominance going forward, but, kind of continued rise of the alts as, they focus on kind of different value propositions and investors start to appreciate that.